Breaking news! Sound the alarm! This is not a drill, people. The market we saw today, July 31st, 2025, was a battlefield. A real clash of titans. We saw big swings, big money, and big opportunities. If you blinked, you missed it. The Dow Jones Industrial Average, the S&P 500, the Nasdaq. They were all dancing to a tune that changed by the minute. Some folks are celebrating tonight. Others are licking their wounds. Let's name names. Who were the heroes and who were the zeros today? In the winner's circle, we have to talk about the energy sector. It was on fire. Companies like ExxonMobil and Chevron were charging ahead like bulls in a china shop. Why? Crude oil prices surged, plain and simple. Geopolitical tensions are flaring up again in the Middle East, and that always gets the oil traders excited. On the flip side, we saw some serious pain in the technology space. The Nasdaq took it on the chin, and the biggest loser was a former market darling, a major software company that I can't name here, but you know who I'm talking about. They released their quarterly earnings last night, and folks, it was a disaster. They missed on revenue, they missed on earnings. The stock got absolutely obliterated today, down nearly 20%. Another sector that deserves a standing ovation is industrials. I'm talking about the big machinery, a lot of metal companies. Think Caterpillar, think Deere. These guys are benefiting from the massive infrastructure spending bill that's finally starting to kick in. We're seeing new orders for everything from bulldozers to tractors. These aren't flashy tech stocks, but they are the backbone of the economy. They are solid, dependable, and right now, they are delivering the goods for shareholders. So, why all this drama? What's the real story behind today's moves? It all comes down to two major forces: inflation fears and the Federal Reserve. This morning, we got the latest Consumer Price Index report, and it came in hotter than expected. That means inflation is still sticky. It's not going away as quickly as we had hoped. That single piece of data sent a shockwave through the market. It immediately made traders worry that the Federal Reserve will have to keep interest rates higher for longer, and higher rates are like kryptonite for growth stocks, especially in the tech sector. This fear about the Fed is the #1 story right now. Every single investor is hanging on every word from the Fed chairman. The possibility of another rate hike before the end of the year, which we thought was off the table, is now back in play. That's why you saw that violent rotation out of tech and into value sectors like energy and industrials. Higher interest rates make the future profits of tech companies less valuable today. Beyond our borders, global events are also pouring fuel on the fire. The renewed tensions in the Middle East are a huge factor, directly impacting oil prices and creating uncertainty. We also got some weak manufacturing data out of China overnight. Finally, let's talk about the consumer. The weak retail sales report I mentioned earlier is a massive red flag. The American consumer is the engine of our economy. When that engine starts to sputter, everyone gets nervous. So, where do we go from here? What's the game plan? First, keep your eyes glued on the bond market. Specifically, watch the yield on the 10-year Treasury note. That is the market's fever gauge for inflation and interest rate expectations. Next up on the calendar is the big one, the monthly jobs report, which comes out tomorrow morning. This report is huge. It will give us the clearest picture yet of the health of the labor market and the economy. The market is hoping for a Goldilocks number, not too hot, not too cold. The reaction to that report will set the tone for the entire month of August. My advice to you is this: don't panic. Panic selling is a loser's game. But don't be complacent either. This is a time to be selective. It's a stock picker's market. Look for best-of-breed companies with strong balance sheets, real earnings, and pricing power. These are the companies that can survive and thrive in a tough environment. Finally, remember that chaos creates opportunity. These big, volatile down days can be your chance to buy shares in fantastic companies at a discount. The market is a battlefield, yes, but fortunes are made by being brave when others are fearful. Stay disciplined, stay informed, and get ready for the next battle. Because in this market, the opening bell is always just around the corner. Booyah!